So you're wondering if rates are going to get to 6, maybe 7, maybe even 8%, or could they get back down to 3%? That's the goal of our channel here, is we try to inform and educate you guys everything real estate, especially when it comes to the financing options. My name is Dan Frio. I'm a mortgage broker serving the entire country of the United States at this point. So if you need any assistance, if you're looking to build a house, please be careful. Get an attorney, but please reach out to us because a lot of the builders, lenders are not doing a very good job for the clients. If you're looking to buy a house and you need pre-qualified, please reach out to us. We can get you pre-qualified within an hour, and we can go over and give you all the options that you qualify for. If you need a reverse mortgage, a debt consolidation loan, a cash out refinance, a renovation, I said that already, a home equity loan, whatever, anything in regards to residential, anywhere in the country, please let us know. We'd love to help. So the first thing is, if you like what you see, I have a newsletter that goes out every morning. Please subscribe down below. It's free. I don't sell your data. You're good to go, and it gives you a bunch of details. So the reason why you're here, though, is what's going on with mortgage rates. So here's what rates are for today. And then after this, right after this, we're going to go through the economic calendar just to show you some events that are going to take place today, tomorrow, maybe even Friday that might play havoc on mortgage rates. Okay, so this is mortgage rates published by Mortgage News Daily on a daily basis. They survey lenders all over the country. They compile that data and put it right here. Think of it as the Dow Jones of mortgage rates. Okay, so this isn't one stock or one rate. It's compiled data of a bunch of them, and they average it out, and this is what it is. Similar, like I said, to the Dow Jones. So let's go over where mortgage rates are for the day, and then we're going to get to the news and what's really going to take place today that will affect these things. So we go with the 30-year fixed rates coming in at 5.36, up 0.11. We reference that as 11 basis points. Down through here, you can see the 52-week high and low. You can see we've almost doubled in the last year here. Basically, we almost doubled in the last 4 months. All right. Next sell over is a 15-year fixed. It's coming in at 4.78, up 6 basis points. The Mortgage News Daily doesn't post VA and USDA, but since they're government-sponsored loans like FHA, we'll put them into this category right here. So the government-sponsored loans are coming in at 4.78, up 0.14, over 1/8% in one day. That's why we try to explain to everybody we have a program, a couple different programs. If you're looking to buy a house and you're still looking and looking and looking, call us. We have a shop and lock. You can lock in right now while you're still shopping. Okay, so if you were looking at a government-sponsored loan and we locked you in yesterday, your rate would be 1/8 lower than it would be today. So call us to find out more about that program. So that being said, let's move on. We got the 30-year jumbo coming in at 4.69, up 8 basis points. You can see there, it's almost every one of these is almost doubled from their ultimate low, or their 52-week low that you can see down through here. Then we have the 5/1 ARM coming in at 4.48, up 5 basis points. Down through here, you see the 10-year chart. We are in uncharted territories. Hope you found that funny. Chart and then uncharted. Okay, so we got that. You can see that we're at the highest rates in over 10 years, and I don't even know how far back this thing goes, but that's as far as this chart goes. The sentiment today, or the trend is a little bit negative to neutral. I'll show you that in the economic calendar when we get there. But right now, we have the MBS market. Why do we follow this? This is basically what I follow. Okay, it's telling me what's going on with the price of the mortgage bond. Okay, it's a bond that sells on Wall Street. The yield on this thing is the biggest piece of your mortgage rate. So what we follow here is this is what's going on with the price of the bond. Okay, so as this price goes down, mortgage rates go up. It has an inverse. Let's think of it as a flip-flopped. If this is down, rates are up. If this is up, rates are down. You can see the chart down below. We've been in the red for a good 6 months. But look at the bottom. There's a nice V down there. There's been a lot of green in the last week. Yesterday was our first down day in about a week. So that's good news there. All right. So now the news. What's out there that should affect mortgage rates or the sentiment in the markets? You have this. So far today, we've posted manufacturing numbers. They came in better than expected. And we have the JOLT index. What the JOLT index is the number of job openings. So you can see that the manufacturing previous reading was 5.6. We came in, 5.5. We came in at 5.6. Good. So that shouldn't really affect the markets. And the JOLT index came in and dead on to what they expected. So nothing's really going to be there. That's why we're seeing the MBS market really nothing. It's -2, basically nothing. The next few days, we have this data, and I'll go over those tomorrow. As they come in, I'm going to show you how these are affecting rates. But the reason why we go through these is because the Federal Reserve has two mandates, and the Federal Reserve is all over the news right now. And I'm sure you've heard, there's inflation and this and that and this and that. That's why we really monitor the stuff the Federal Reserve monitors. Federal Reserve has two mandates. One is full employment, and two is price stability, aka inflation. So if you go to the chart here, you're going to see a lot of this data, and that's why I chose it. You have job numbers or job openings. You have number of non-farm payroll jobs, how many people got jobs. You have initial jobless claims, jobs. You have oil, inflation. You have jobs, unemployment, aka gives us job data, and manufacturing numbers. So you can get a feel for what I'm looking at here, okay? So the next thing is I always see what's going on in the stock market. Right now, the stock market is basically flat, but a lot of the headline news also plays a role in all this. And now you say you have central banker Bostic. He sits on the Federal Reserve. He's saying, well, the Federal Reserve, I wish these guys would just leave it up to Federal Chairman Powell to do his thing and advise the markets, because the more these guys talk, the more of a mess that they make. So that's basically the news for today. If you'd like to learn more about me and my team, please go to therateupdate.com. And like I said, my team now is basically, we've made a move over to a bank, a federally chartered bank, where we can help individuals throughout the whole country. Why did we do that? You might be saying, Dan, why do you keep moving companies? I've been looking for this for basically my whole life. I want the opportunity to be a broker so I can work with over 100, 150 lenders. But the toughest part that I had was getting licensed in every state. So I sought out a bank that would allow me to work under their federal charter, but also be a broker. And I found it. And we're going to come out, we're going to give you guys all that detail in the next couple weeks to lay out that foundation. But if you're anywhere out in the country right now and you need our assistance, please reach us, because we can now help you. So thank you. I hope you like watching my video. If you did, please give us a thumbs up, subscribe down below, hit the bell every time we post a video, you get an alert. But if you'd like to reach out to us, go to therateupdate.com, and here's everything you need. And if you also see me on the chat button over here, and it is truly me, just reach out and say, hey, Dan, how you doing? And I'll be happy to hear from you. So take care, guys. Thank you so much for watching. I'll see you tomorrow. Bye-bye.